The coming bank regulations that are about to hit the financial system will shock you. If you think the status quo is stable, think again. These new rules are set to change everything from how banks operate to how you handle your savings. And trust me, what's coming will have a far bigger impact on you than you might realize. I've spent the last several months diving deep into these regulatory changes, talking with financial experts, and analyzing data from the biggest financial institutions. What I've discovered is nothing short of mind-blowing. Stick around until the end, because there's one major change that could alter the entire landscape of banking in ways you're probably not even thinking about. Now, let's start with the first big shift: increased surveillance and transparency. Governments across the globe are ramping up their efforts to monitor bank transactions more closely than ever. This isn't just about tracking large transactions or suspicious activity anymore. No, this is about complete transparency in your financial movements. You might think your bank is private, but these regulations are pushing for access to your financial history. No questions asked. For those of you who like to keep things under the radar, this could be a game changer. I'll tell you why this matters in just a bit. Next, we have the digital banking overhaul. What you've probably seen as a small push toward digital banking over the past decade is about to explode into something huge. The reality is that many traditional banks are already being pushed to integrate with digital currencies and blockchain technology. This isn't just about cryptocurrencies either. We're talking about the digital transformation of traditional currencies, where governments want more control over the flow of money. And that could mean serious restrictions on how and where you can spend your money. And then there's the real shocker: new liquidity requirements that could make certain banking practices obsolete. You've probably heard of the term liquidity thrown around before, but in simple terms, banks need to have enough cash on hand to cover their obligations. These new regulations are pushing banks to keep much higher reserves, which could limit the number of loans they're able to give out, and even make accessing your own money harder during times of crisis. But here's the kicker: the big change that could impact you directly: the move toward a central bank digital currency, or CBDC. Imagine a digital dollar, controlled not by private banks but by the government. With CBDCs, everything you do, from buying coffee to making large transactions, could be tracked and monitored by the central bank. This isn't some distant future anymore. Countries like China are already ahead of the game, and the US is moving fast to catch up. You need to ask yourself, how will this affect your financial freedom, and what can you do about it? Now, I know all of this sounds like a lot to take in. These regulations are being pushed through quickly, and there's not much room for debate on them. But the good news is, with the right strategy, you can prepare. I've studied these upcoming changes extensively, and I've got a few tips on how you can protect yourself in this shifting landscape. So, as these bank regulations begin to roll out, remember, knowledge is power. If you want to stay ahead of the curve, keep an eye on these changes and be ready to adapt. And if you found this video useful, don't forget to subscribe. By subscribing, you'll get more content like this to help you navigate these major shifts in the financial world.